All right, what's up, guys? Welcome back to the Hustle Podcast. My name is John. I'm your host. We're on episode 41, and I got my co-host here.
Gabriel Arambula, because I'm going to start pronouncing it properly from now on, as if I was in Spain. Arambula.
Arambala.
Ra-
Arambala. All right, and
I have nothing to add.
yeah, nothing.
Oh, you
Until-
just wait. Your
Just
turn's
wait,
coming
Just
up.
wait, guys.
Your turn to act a fool
Of
is coming
course.
right up.
And if you guys are new here, what we talk about on this podcast is everything relating to business, mindset, how we can add value to you guys. And also, Gabe and I share our collective 25 years of entrepreneurial experience and mistakes. That way, you guys know what to avoid in whatever journey you're on. And as you guys know, sometimes we bring on special guests. Today, we have Ice Bravo. She's been in the mortgage industry for quite some time. And we're going to have Gabe ask her a few questions.
Yeah.
And give you guys some value. So, Gabe.
Yeah, so, ultimately, we're going to be talking about home buying, down payment assistance programs, and, take a light dive into some of the things to look out for. We all know that if it sounds too good to be true, it's a high probability that it is too good to be true, or, maybe you just need to do a little bit more research to find all the facts so you don't get yourself into a situation that you would have rather avoided. So, Ice, you've been in the lending real estate landscape, changing lives, making renters into homeowners, and coaching them through that process. And home ownership, it truly is a blessing. And until you realize that, as becoming a homeowner, it's really hard to tell. So going into home buying, working with first time home buyers, you've helped many. Like, why would a home buyer consider a down payment assistance program?
So, great question. The majority of, at least my clients, which obviously I can speak on, but the majority of the clients either have money and they don't want to spend their money because they're like, what if something happens? ¿Qué tal si algo pasa? Quiero mi guardadito. I want my little, my bag. Secure the bag, right? Everybody's about secure the bag. Or maybe they genuinely need it because they have the income, they have the work history, they want to buy a house. I need to become a homeowner. I'm tired of renting, but they lack the funds or they lack the knowledge. Yeah. So those are two different things, whether you have the money, you don't want to use it, or you genuinely need it. So I think that the fact that we're highlighting this, or we're just diving deep into the misconception or lack of transparency, like, be transparent. Tell me what the program that you're offering me actually entails, what it requires, and is it really a grant? Is it really a loan, or is it genuinely a gift? From, because we all know, lo barato sale caro. Sometimes.
No, what's that? You got to translate that.
Okay,
you
you guys don't know Spanish? No. Lo barato sale caro, meaning that you get what you pay for.
Yeah.
You think, oh, it's a deal, but is it really a deal? Now, mind you, that's your decision to make, because I'm not going to sit here and tell you, hey, Gabriel, you have the $27,000 in closing that you need. This is just an example. Why don't you want to spend it? If, for example, the lender, whoever is, doing the down payment assistance, why don't you want to use it? Why would you do this? Those are your decisions based off of your situation. But I think that what you and I and John are here to do is to take back or peel back the onion, right? To really go deep into, is it a lot of realtors or say lenders on TikTok, the platform that I use the most, or Instagram or whatever place it might be, they're like, hey, this county is giving you X amount to buy a home there. So you and I did, we were talking about it. We're like, hey, let's really go do the research. Are they giving us this? Because if it's free money, then hey, I want in. I want to move.
100%. Yeah.
Free money, right?
Yeah, 100%. And when I got started in the lending industry as a loan officer in 2003, at the time, we would constantly get calls from potential home buyers wanting more information about down payment assistance programs. Now, at that time, we had financing options that would finance a buyer 100% of the loan amount, right? And at that time, I didn't learn too much about any down payment assistance programs because we had loans that could accommodate buyers and their needs. Now, as the market changed and those loans went away, I would hear of and look into different down payment assistance programs, and it always seemed as if there was like some kind of caveat, or there was a barrier to entry that only few could fit through. And the thing that bothered me about that is consumers always seem to believe that there was some type of down payment assistance program that would work for them regardless of how much income they made or where they wanted to buy or the type of house. And what I noticed is that the idea or the thought that there's a perfect down payment assistance program would almost prevent people from moving forward in buying a house. Is that anything that you saw, or what are you hearing from consumers, or what do you hear from consumers in regards to purchasing a home? Is a down payment assistance program something they ask for initially? Like, what's your pulse check on that?
So I'll give you a little quick story,
Mhm.
which are never quick for me, but I'll give you a scenario. I literally sat when I became a lender about 5 years ago. I think it was like my first year. Sat down in our office with the lender, and I'm like, okay, let's price this loan out. It's down payment assistance, right? I'm sitting there, I'm like, am I pushing the wrong button? How is there still a cost? Because I'm like, down payment assistance.
Yeah.
I have, it's probably ISIS doesn't know how to work the system, because there was still money that needed to be brought to the table. So to answer your question, when my client asks for down payment assistance, they expect asistencia. They expect the assistance.
Yeah.
So when I tell them, hey guys, well, there's still a cost, they look at me like, what are you holding from me, ISIS? Why aren't you giving me the down payment assistance program?
Yeah.
Right?
Yeah,
Like, why?
absolutely.
And until the day that I literally sat there personally and realized, therefore, later that, hey, I wasn't doing it right. I mean, I wasn't doing it wrong. I was actually doing it correctly, but there was still a cost. It genuinely, like, it blew my mind.
Yeah.
Like, I'm like,
Like,
wait a
where's the
minute.
help? Where's the assistance?
Where is the
Yeah.
yes, like, where is the assistance? Because I genuinely was thinking I had to have pushed a button incorrectly, because there was no assistance coming up. So that brings me into answering your question. Yes, my clients have that belief, like Isis did before she sat down and realized that the assistance isn't really an assistance. It is a loan. It is a loan. It is just different from what you think or the consumer expects. Because if the consumer comes to ICE and says, ECs, I need down payment assistance, then they expect to come in with $0.
Yeah.
Zero, like $0.
100%. Yeah.
And at, in a sense, zero cost, which there is not. Everything costs money.
Yes.
Whether
everything.
you pay in front or you pay in the back.
With a higher interest rate.
Without pun intended of atrás. Like, I'm not trying to, do something that's not ethical or whatever to my client. It's just, where is the money going to come from? Is it coming from the borrower at the table? Is it coming from the interest rates? Is it coming from the silent second that's a repayable loan? Where, or last one that I learned with you, because I didn't have any knowledge about the program that we're gonna speak on right now. Or does it come from a shared equity that will be later given to the bank? Because they don't lose. That's one thing you guys have to understand is the bank, just like the house, they do not lose. And it's not because, oh, big bad bank. It's because it's set up so that they could continue to keep doing rinse and repeat for other consumers.
So going back to these down payment assistance programs, and you're absolutely right, Ice. The mentality of home buyers is, if they're taking advantage of a down payment assistance program, they don't have to come in with nothing. And we know that's false. And I think one of the misconceptions, or one of the knowledge gaps that aspiring home buyers have, one of the knowledge gaps, and then also one of the items that realtors and loan officers don't really talk about too much, are going to be the fact that when you're buying a home, it's more than just a down payment that you're responsible for. When you buy a home, you're responsible to cover the closing costs as well. So, for example, if you're financing a property, let's say you're financing $1 million property, and you're coming in with 10% down, $100,000.
Mm-hmm.
Well, you're going to have to cover closing costs that are going to be over and above that $100,000. Now, the amount of closing costs that you pay, it varies, and it could range anywhere from about 3 to 5% on average. And the variables are going to be how your loan is structured. Are you paying upfront origination fees? Are you buying down the interest rate? Are you including your taxes and insurance in your monthly payment? All these factors add to how much your closing costs are. So let's just clear the air with that. As a home buyer, you need to have closing costs. There are some down payment assistance programs that will help cover your closing costs. But from an overall buyer's perspective, whether you're getting a down payment assistance program or not, you have to know that there are going to be costs incurred that you will have to come up with at the closing table most of the time. Not only that, there are out of pocket expenses that you have to pay for prior to the close of escrow, like your inspections, your appraisal fee, your home inspection fees, and any other inspections that you want done on the home. These are costs that a home buyer has to pay out of pocket, whether they have a down payment assistance program or not. So let's clear the air there.
Mm-hmm.
Now, when it comes to down payment assistance programs, there's a few different caveats, and we just want to dive in to some of those in order to help give you, the watcher, the listener, a little bit more insight to doing the proper research, asking the proper questions when you reach out to a loan officer or when you go to the city website. A lot of this information, it's free. You just need to look for it. You just need to go for, you have to do your own research. In today's day and age, unfortunately, there are professionals that they are not as good at their profession as they should be. And I'll give you a perfect example. When the pandemic hit, you heard of the Prop 19 thing, where if you sold a property and you were of a certain age and met a certain criteria and you were downsizing, you could transfer your property tax base from your previous property to your new property. I had a client, and anytime it comes to taxes, I always have my clients reach out to their CPA.
Mm-hmm.
And their CPA told my client that they wouldn't qualify for Prop 19 and transferring their property tax base. And
Based
so I
off of
told,
what?
yeah, and I told my client, I said, well, let me do some reading, let me do some research.
Mm-hmm.
I did the reading, I did the research. She qualified for Prop 19. Her property tax base was transferred over to her new property from her old property, which had a lower property tax base. So my point is that, as consumers, we need to take the initiative to do our own research. Call professionals, right? Double check the information, and don't just call one. Call a couple, get some insight. But the um the necessity to do your own research is critical. And with a lot of these down payment assistance programs, you can go online and find the research. Don't call a loan officer and say, hey, find me a down payment assistance program, because they're probably not going to do it, or they might lead you in the wrong direction, because there's so many out there, and it's going to be based on geography, a number of different criteria that we'll get into. But everything we cover is going to be online. So one of the down payment assistance programs that we wanted to cover is offered through many cities in California, in Southern California. And with this particular down payment assistance program, in comparison to others, there are a few commonalities that I have found, and that you'll find when you do your research. The first level commonality we'll hit is that in order to qualify for these first time home buyer programs, is oftentimes what they're referred to as, is you have to be a first time home buyer, meaning that you haven't bought or owned a home in the past 3 years. Now, there are some of these first time homebuyer programs that will say that you have to have never owned or bought a home in your entire life, right? And so that's a criteria that you want to, as a consumer and as a home buyer, want to be cognizant of. Another item that we'll come across is, some of these first time home buyer grants are actually, you have to pay them back. They may not require an initial monthly payment, but there are criteria where you have to repay it. Ice, do you recall some of those criteria that need to, or that would require a homeowner to pay back the grants?
So if you refinance within, what is it, the first 15 years,
Good,
or if
good
you
question.
sell,
So
right, one of them.
it varies, but one program we're looking
Hmm.
at, yeah, if you refinance
Hmm.
or
Or
sell
sell the property.
within 15 years,
First, yeah.
you have to pay that money that you borrowed back.
So that means that, case in point, client needed the down payment assistance. She met all the requirements. So she says, I need this, pretend it's 15 or 17,000. I need the 17,000. I don't have the down payment. Well, guess what, buyer A, you need to stay in the property for 15 years without refinancing or selling it. But if you decide at year 7, and mind you, this is a thing, I go over this with all my clients. I'm always like, are you okay with that? But the majority of them, I tell them, I prepare them, look, you don't have the money to buy the house right now, but you want the house. Yes. Okay. So what's going to happen when you guys sell or decide to refinance in 7 years? I'm paying the money back. As long as you're transparent, you tell the client this is what it is, and they agree to it, then let's go. Because again, it's not my job to make a decision for you,
Yeah.
but it is my job to give you the information so you could make an informed decision. And to piggyback off of what you said is, okay, you said let's do our own research. Okay, well, good for us to do, the consumer to do their own research. But I don't know about you. If I'm researching all these different programs, but I think I blank, if there's a blanket of everybody qualifies, no, it's all the different requirements within that program. That's why you need to look for the service from a professional that's going to sit and educate you.
Yes.
Now, mind you, you and I both know we get very busy, and I have people sometimes calling me, and they have like 3,000 questions for one product. And here I am. I'm very mindful, and I always like to educate, because I remember being on the other side where I had no idea what I was doing. I wanted to buy a home. We at one point we didn't have the money, had somebody taking the 10-15 minutes. And mind you, now I'm very mindful of my time. I give them 10-15 minutes, because before ISIS would sit there for 30 minutes, and there goes ISIS giving 30 minutes, 30 minutes. And then the same client, not that I didn't, do it with my heart as to, for as a service, but I found myself getting caught up in the same thing where I stopped producing, which I need to produce, you guys.
Yeah.
I have a family I have to
Yeah.
feed. But where I was going with this is that if you have enough people that want to give back and give a sense of service, but don't take it for granted. Listen to what they tell you. Don't say, oh, I don't want to hear what you're saying. Let me go call somebody else, ask them the same questions, and expect a different answer. That's not the way this goes.
Yeah.
It's not so much that ECs doesn't want you to, qualify. It's based off what you told me. This is what it is. Do you want to do this? I get hit with, I don't know about you, but I get hit with well, what if I pay more? Will they change that? Well, what if I don't report what I'm making? What if I say I'm going to live there? No, you guys, the requirements are these: primary residence. You have never owned a home. You're going to live in the property. You're not going to rent it out. You are going to repay the money, or you're going to start paying it now, or you're going to share the equity.
Yeah.
Did I go off on a tangent?
No. You brought up a good point. So,
Right?
like, another one of the requirements too is it has to be a primary residence, and you have to actually live in the house, right? So, the fact that this money that you borrow has to be repaid, and in most cases, folks are going to be borrowing a lot more than $17,000, right? And so, that's one of the items that we found, that the money that you borrow in a lot of these localized state, city down payment assistance programs, that money has to be repaid if you refinance or sell within a certain amount of time. Now, another criteria that we identified is the necessity to share the equity with the entity that's lending you the money. And what that means is this: the specific program we looked at with Riverside County is that if you refinance or sell within the first 15 years, you also must share 10% of the equity with the city. So 15 years is a pretty long time. Let's just say the average homeowner keeps the same loan / home for about 5 to 7 years max. 5 to 7 years max. A lot of people will refinance in 3 to 5 years,
Oh yeah.
right?
Oh yeah, whether they move or not.
Whether
Right.
whether they move or not,
Well,
right?
obviously you're refinancing, but to piggyback off of what you're saying, so the program he's gonna give you guys details about, you're gonna go down the list, right?
Yep.
It's a 15-year. You have to stay there. So go ahead.
It's
Make sure
15
that, yeah,
year.
15 years.
You got to stay there. Let's say year 5.
Mhm.
Year 5, you want to refinance or sell, and let's say your house is appreciated by $100,000.
You bought it at 500,000.
500 grand.
Yeah.
And 5 years it appreciates, it goes to 600,000, you sell it for 600,000. Well, this particular program with Riverside County requires you to share 10% of the equity earned in that time frame. So that would equate to, in this particular scenario, $10,000 of equity you would share that gets added to the payoff. So now you're paying $110,000 towards the payoff of the gift, right?
So basically, so you guys don't get confused, is the program we're talking about, it's, several people are sharing it on Instagram and TikTok. They're like, hey, if you buy in Riverside
This
County
city,
or
yeah.
buying in Pomona, you're gonna get $100,000. No, you're not. You're getting it, but you're not getting it. They're not giving it to you. It's a shared equity. So what Gabriel's saying is, you buy the house for 500, right? It appraises to 600,000 after 5 years. You have to pay back 110,000. Why? Because 10% of whatever the equity was.
Yeah.
Not only that, that means that if you go to sell it, and let's just pretend that you're trying to buy another house, well, guess what? You're $110,000 minus what your profits should have been. And if you're okay with that, well, then do it, because it's just the purpose.
And that's the
that's
whole
fine.
point. That's what we want to bring across.
Yeah.
Like, this is not, we're not like, down payment assistance programs are not bad. But what we want to do is we want to make sure that consumers are aware of some of the pitfalls that they may want to avoid. Again, there's individuals out there that this is the perfect fit. Now, that kind of leads me to the next section, like the barrier to entry. Like, how does someone even qualify for these programs other than being a first-time home buyer? Like, what are some of the other qualifying criteria? Because again, there are qualifying criteria. They're not just handing out money and grants to anybody that walks in. And one of the criteria is that in this area, in Southern California or any other metropolitan area that has a higher price point for the median home, entry-level home, this following criteria may be tough. Now, with some of these first-time homebuyer grants that are out there, your income can only be 80% of the area median income.
Let's touch on Riverside. So what is that?
So Riverside, area median income in Riverside for one individual is $81,900.
So combined?
So if we have two people, that takes you up to $93,600. You take it up to 3 people in the household, you got $105,300. Now, the challenge is the median price of homes in Riverside County. I mean, you're 550, 600, and that's like at the low end. To get a single family home in Riverside County, you're gonna be like a decent one, like in the mid sixes for a nice one, like entry level 3-bedroom 2-bathroom home. And in order to qualify for something like that, you're gonna have to make, you're gonna have to be in the six figure income, depending on how much debt you have.
So what you're saying is, if I don't make 6 figures in Riverside County, right, then I can't buy there. But if
it's gonna be tough to afford a home.
But
there.
if ISIS wants 100,000, right, because ISIS doesn't want to come in with her money or what have you, then I disqualify myself there, right there. Yeah, right.
For the first time home buyer program.
Yes.
Right?
So that means that if ISIS wants to use this, she can't. That doesn't mean that well, now I'm just gonna talk to myself about myself in the third person, but we're gonna pretend that John's my lender. So my hello John is like, hey, he sees it's not you, it's really the city. you make too much for this, so I'm not withholding this product from you. You're willing to give me that product. I have the credit, but I make too much. So when you talk to your LOs, it's not that he doesn't want to offer you this, it's just that ECs is making six figures, so ECs doesn't qualify for this. So then now we go back to the normal, which I call it normal, but the other options, which is either the lender with the NADA program, right? You'll give us more details about that. But it's not necessarily a good idea to say, oh, just because this county, that county is giving money. They're not, first of all, they're not giving it away. They're giving you the option of using their programs. Number one. Number two, if you make too much money, you don't qualify. Okay, so out the door. Now we go back to the lender. We go back to other lenders that I'm not going to say the names, but their options. Or you go to what is it the Chinoa?
You could do like there's a number like Chinoa. You could do Calhaffa.
Yeah, but they also have like limits.
Yeah, that's a big thing.
See?
Like the area median income, the income limits, the biggest flaw of these down payment assistance programs through state and local governments, the biggest flaw is going to be the income limits, and the areas that it impacts the highest are going to be your metropolitan areas like LA County, San Diego County, Orange County, Riverside County. It's like all Southern California. Everyone wants to live in Southern California. It's close to the beach. It's always sunny. So the price of homes are high. When you're reaching median price of home, 600,000 plus, it's going to be hard to qualify for these first time home buy, or excuse me, these down payment assistance programs, simply because of the area median income limitations. Now, again, there's some that will let you go to the full area median income, and there's some that will allow you to gross the area median income up. But even in those situations where you're able to go at or above the area median income, if you have a lot of consumer debt, you're still not going to be able to qualify. And I was going over a file with a loan officer today, and someone had a $700 car payment, made about $4,500 a month with the
There's
700.
a lot of those.
Yeah,
There's
900.
900.
It's 1,000. Yeah,
I can't
crazy.
Imagine spending $900 on a car
a month
like,
on a car just to
dude,
drive
that's
it.
just crazy. Like I'd rather have
Yeah.
money for my candies or whatever,
Yeah.
and I'd rather just ride around in my
It's
10-year-old
crazy.
Durango, which still looks new because
Yeah.
I take care of her.
Heck yeah.
But who's gonna pay $900 for a car? But those are
each month.
Each month. So when you're looking at, you're sitting with your LOs or your clients, you're like, you have two car payments. One's 900, the other one's 6. Like there is part of your mortgage payment, and they're like, why don't I qualify? It's the huge payments that you guys have, right? So I want to piggyback off of what you said right now, or how you introduced the program. You said, let's start off with the $1 million property. Really, are people that are trying to buy $1 million property trying to get down payment assistance?
Nope.
Okay, so I was like, why is he starting there? But I didn't want to, knock my boy down.
Even numbers.
Wow.
Even numbers.
Yeah, but
and I like $1 million.
I figured, but I was like, oh, will they let you use it? Because that's another thing, right? What is a person trying to buy $1 million home or $900,000 home? Why are you trying to get down payment assistance? Like, what are you doing? Right?
Oh, 100%.
We're not knocking you, obviously, but it's like, that's another thing. If you're trying to buy that home, you need to make X amount. So you're automatically not going to qualify. Number one. Number two, if you are considering buying a home, guys, get with the right realtor and the right LO, because at the end of the day, and I had this eye opener with the client that, God willing, we should be closing this week. I told him, I said, look, if I give you a 6.875, it comes at a cost. And he's like, I don't understand. Okay. Meaning it costs for that rate. Okay. If I give you a 6.99, there's a credit which will be deducted from your cost. He's like, but why? And I said, because that's the cost of borrowing money. Okay. That's the cost. If your credit score is higher, it costs less. You're less of a risk. If you're in the bracket of the FICO, right, that costs less, FICO, right? And also your DTIs. And see, this is a thing. People are like, it's not a big deal. It is a 100%. Big deal. If I have a lot of credit card debt, okay, I could buy a house, obviously based off of my means. But if I have no credit card debt, I have a steady job, I make 6 figures. I'm not saying all of you guys were trying to be rude, no. But if I'm setting myself up for knowing where I could buy. I have sufficient income to buy the house that I want. I have no debt. I'm less of a risk because I don't have a $900 payment. I don't have a $600 payment because they're thinking this way. If Isis doesn't have a car to drive to work, how is she going to make her mortgage payment? Make sense? But if I have all these bills, then I'm most likely not to make my payment for the mortgage. Whereas if I don't have any bills, only my mortgage, I'm less of a risk. Case in point, better interest rate, better credit score, all that stuff, right? So back to my client, when I went through the numbers with them and he's like, well, why don't I, and this is true, factual, why don't I qualify for down payment assistance? We're almost at docs, you guys.
Oh,
and I was
man.
like, you are so
No.
cute. And I didn't say you are so cute to be
So you're at the
condescending.
end of the process, about to close, and he's asking you why do I qualify for down payment assistance?
You're right. And I was just like about to pull my hair out. I'm like, well, let's and I said, you know what, I'm a professional and this is my job. You don't just pay me to be nice to you, you pay me to do my job. I said, okay, let's circle back. Do you recall the first time I spoke to you? We went through what? The different types of loans. You asked about down payment assistance, and I told you it incurs this interest rate. Do you recall that? Yes, Isis. What was the interest rate at? 7.625. Oh, if you're not liking a 6.85, how are you going to like a 7.625? Okay, but you're not coming out of pocket. Yeah, right. So, but where's the payment? If you're like, oh, debating the $200 less in payment now, but you want money up front. So where am I going with this? It costs people. Where
It's
am
a trade-off.
It's a trade-off. If I'm going to take the money, I'm going to trade it off for a higher payment. If I'm not taking the money, then I'm going to trade it off for a lower payment.
Yeah.
Right? Or I'm going to find a happy medium. A seller credit, boom, less money out of my pocket, and a rate with the credit within it, which is a little bit harder to come by right now in the market that we have. But it's about moving money in different areas. What do I mean? It's like, okay, the money's sitting in your bank account, investment in a house.
Yeah.
If your money is within the rate, invest it in your house. If you are sitting with your realtor, have them negotiate for you. And if it's not a negotiating or it's not negotiable, go find another house that has more days on market. Because right there, guess what? All of a sudden, 10, 15,000 in credit that can be used towards your closing costs. So what I'm trying to say is, don't discount buying a house. It's an investment. Just decide whether you want to sit and watch your money accrue interest at 10 cents per month because you have X amount in your bank account. They're not paying you anything. They have your money there. Or I'm going to invest it in my house where my equity is going up because the value of homes are going up. So I might not have money in my bank account, but I have it invested in my house.
Yeah.
Right?
Yeah, 100%.
That is a bar. I know whoever's watching that's a bar because at the end of the day, what I told the client, I said, look, you're free to cancel. I said, but at the end of the day, I keep saying the other day because literally at the end of the day, you will decide whether you're moving the X amount that you have in that bank account, just sitting there, not getting any incurring any interest, no benefit to you, or you're going to pull the trigger, you're going to go buy that house. And when I talk to you again, God willing, in a year or what have you, you're already cha-ching, equity, cha-ching, equity, cha-ching, instead of 10, 20, 30, 40, 50, 60 cents, people, not thousands.
Yeah.
Because let's be honest, your bank does not pay you to have your money housed with them.
No.
What they're doing is they're spending your money.
Yeah, they're lending
They're
it. They're making
your
money off lending your money.
Here, and I'm not gonna say what bank it was, but the other day ISIS went to do a transfer from one account, not the same bank, to a different account. It said, ISIS, your money will be there in 3 days. I'm like,
3 days? Come
my money,
on.
I see my money.
It's there.
It's right
and
there.
It's electronic. What do you mean 3 days?
Where's ISIS's money? They're out there playing Monopoly with ISIS's money.
Gosh,
so I'm not talking bad about banks, but I'm saying you decide where you want to park your money. Is it in your account, available in maybe 3 to 5 days? Or is it in your home, making you some, equity? So just so you know, my client moved forward. God willing, we're going to close them. But that was a decision that he had to make. And did I go back and explain down payment assistance to him again? Yes. And the
Mhm.
thing for him was the interest rate. So people,
Hmm.
it's the interest rate. Yes, he was going to get the money up front. I was going to have to switch his loan, but at the end of the day, it was the cost of the money that he was going to get.
Yeah.
Everything has a cost. It's either upfront or in the back end.
Mm.
Yep. And then on that note, the less money you put down on a home, the more you finance, the higher your payments are going to be. You brought up a lot of good items, dude.
Go ahead. I'm ready. Can I have a candy now? So
Yeah,
while he
yeah. She
talks,
needs a candy.
I
She
could
needs a
just see
candy. Yeah,
candy.
you see
Oh, yeah.
candy.
You can edit that out.
That's
So
right.
another thing to bring up with first time homebuyer programs, and you got to forgive me, we're talking about a Pomona first time homebuyer program. A lot of the data we're pulling out, but it's very synonymous to a lot of the other programs. I was looking at a program in Riverside County, and there's actually limits
Mm,
on the purchase price. Where so
I
the
didn't
the
know that.
the limit for a new construction single family and a existing single family is $527,000. So I mean, you could get a house in Riverside County for that much.
Where?
I don't know what it's going to look like. I don't know exactly where it's at, and I don't know how much money it's going to take you to update the property.
Well, it's okay though, because
You
think of it
know.
like this: when you wake up, well, you do, but when I wake up, I don't look like this. I have to conceal, I have to correct. So that's an example that I like to do for my
Mhm.
clients is when you buy a house, you have to give her love. You
Yeah.
have to fix her up. So by all means, we're
Hmm.
not discounting down payment assistance, right? We're not.
Hmm.
We're just saying know what you're paying for.
Yes,
Okay.
and know if it's even a good idea. Because
Hmm.
again, so if you're a home buyer and you're looking at down payment assistance programs, you should probably first see what the max purchase price you
Number
can
one.
opt for is,
Hmm.
because that's gonna play a big factor. If you're looking at homes, no, and you're thinking about down payment assistance, know what the max purchase price you can go to is, and don't waste your time. Right? Don't go in the circles finding a way if you can't even get excuse me the purchase price that you're shooting for. So
Number
that's
one.
one thing
Hmm.
to think of. Going into alternative options, and let's say you're an individual and you make too much money. You don't qualify for down payment assistance, but you have no problem making a monthly payment because you make good income. Uh, you know, with us at the lender, we have a unique down payment assistance program that takes a FHA first mortgage, which will finance 96.5% of the purchase price. And we take a second loan that's three and a half, anywhere from 3.5% to 5%, because we got two different down payment assistance programs. And we fund that second loan in house to cover that down payment on an FHA loan. And the second that covers that down payment, it is payable. You have to pay it back, but it's only a loan that's 3.5% of the purchase price. Very small loan. The interest rate is only 2% above the interest rate of the first mortgage.
So give me an example. So let's pretend I'm financing a house I'm out in Hemet. Okay, I'm buying a house out in Hemet. Price point is about 310,000.
Mhm.
My down payment is roughly about 11,000. So you're saying that you guys would give me my down payment and then give me an additional 11,000, which is another 3.5% for my closing costs.
No, we have two options.
Okay.
One, we either give you that 3.5% down,
Okay.
or we give you 5% so that you
Oh,
have
so
one
not
and
six.
a half
Okay,
percent
my
towards
correction.
closing
Okay,
costs. So
so
yeah,
not
we got
yeah.
two
So
different ones.
two
Yep.
different. Okay, so then and so to correct myself, so you give me the 3.5%, right?
Hmm.
With along with an additional 2%, which would be about $6,000, right?
With an additional one and a
With
half,
the
one
yeah,
and a half
one and a
percent.
half. Oh,
Yep.
sorry, 1.5%, and that will cover a portion. Because
Of your
remember,
closing costs.
it's
Yeah.
not going to cover all your closing
Hmm.
costs. This is just simple math. I'm looking at it in
Correct.
my mind, even though I kept giving, going above,
Mhm.
but right, girl math. Don't put that in this funny. But now I still have to come out of pocket because, like we said, there are closing costs. But listen to this. This is the no-brainer. Get you an agent that negotiates the
Yes.
difference, might drop the difference in seller credit so that you essentially don't have to come to the
Hmm.
table with anything.
Oh yeah.
And don't
100%.
don't do a
Yeah.
short sale, people, because they won't allow you to finance
Yeah.
anything. Just know that they won't, and they won't give you credits. But find you a property where the seller, and I hate to say it, where the seller is nicer. We're not going to call him desperate or her desperate,
Mhm.
but where they're more willing to give you a credit, because again,
Yes.
that credit can be used for your closing costs, right?
Oh, 100%.
100%.
Yeah, 100%. And the thing that I love, another thing I love about our down payment assistance
Mhm.
program is that the pricing, the interest rates, they're phenomenal. They're great. There's other companies that I've used in the past as a retail loan officer for similar down payment assistance programs, and the rates are higher. And what this enables loan officers to do for their borrowers is structure the loan as a no point loan and still have a very competitive interest rate. So that is going to help the home buyer save in closing costs, because when you take a look at closing costs for buying a home, they're spread across from title fees, escrow fees, prepaid items like interest, like taxes, like insurance, and then there's mortgage fees, origination fees, loan fees, and loan fees can account for 2 to 3% of the loan amount. Now, when I mention structuring these down payment assistance loans as a no point loan, that would remove that 2 to 3% cost that as a home buyer you normally have to come up with. So the down payment assistance program that we offer at the lender, the NADA and the NADA Plus, because you don't have to bring NADA to the table, nothing. That's
Plus
nothing.
nada y
Yeah,
nada.
NADA Plus.
Okay.
Right. The thing I love about these programs is that we're able to structure, and I see a lot of loan officers structuring these loans as no point loans, so their borrowers are not paying any origination fee. They're not bringing in a down payment. All they have to do is help cover title fees, escrow fees, and prepaid items. Now, I even have there's other agents out there that are great like you who
Thank
negotiate
you.
these credits for closing costs. And I've even had some instances where we had too much money to play with. We had too
I
much
love those
credit. We had too much
situations where
credit.
there's too much.
We had another credit, lender credit to cover some of the borrower's closing costs, and we had to buy the rate down because the
You
borrower
can't
had to.
get money back.
Yeah,
So
you
have
can't
to
get money back.
you have to figure out where to spend your money.
Yes,
So
exactly.
yeah, so I want you to go back to the no point thing. So you structure it no points. No points meaning you don't put the cost of the loan within the rate.
Yeah,
Okay.
yeah.
So
Well, yeah.
yeah.
A no point loan is essentially you as a borrower, you're taking a higher interest rate,
Mhm.
but you're not paying origination fees.
Right.
Where the opposite would be, you could take a lower interest rate,
But you.
but you're paying origination
Mhm.
fees, which wouldn't really make sense unless you needed to do so to qualify, since you're obtaining a down payment assistance program. The main purpose anyone should really go for a down payment assistance program is because it makes financial sense for them and their situation. Don't do it because your brother told you, your cousin told you, your mother told you, your realtor, your loan officer told you to. You have to take a look at your individual unique situation to see if it makes sense for you, because it does make sense sometimes. Sometimes it doesn't. But when I talk about doing the no point loan, that's what I'm referring to. Helping reduce the cost of home ownership even more is what we're looking
The
to do.
upfront cost, because there is
Yes.
a cost. That doesn't mean it's reducing the cost. That means it doesn't cost. It means up front.
Yes, correct. Like
like
closing costs wise.
what am I coming? It's like when you're dating a guy and you're like, what do you bring to the table? Like, what are you bringing me?
Mhm.
What's on the table for me? So when you're getting a loan, you're like, what am I bringing to the table? What am I literally coming out of pocket?
Yeah.
Right. It's like, what are you bringing? So, no cost loan. So we touched on that. We basically we gave it an example of, what is it? Riverside County.
Yeah, Riverside County,
Did we
tapped in
go?
Pomona,
Yeah,
tapped in
Pomona.
Pomona a little bit.
What are the? Do you have San Diego on there? Just
I
in
do, I
case?
don't have San Diego
Okay.
on here,
Because
but
it is
I
higher cost. So
yeah,
obviously
it is higher cost.
Okay.
So I will tell you this: more than likely, it's going to be very similar to Pomona, to Riverside, to all these city and state funded down payment assistance programs. They're all very similar in regards to qualifying criteria. So take a deep dive. Now, with our down payment assistance program, really the barrier to entry to our down payment assistance program is going to be a couple. One, we follow FHA guidelines on our first mortgage. So per county, you will be limited to the loan limits in that area. So that's one thing. The minimum FICO score is 680 FICO score, so there's a credit score requirement, which is not bad, not hard to get to if you're not already there. But aside from that, I found it to be a great down payment assistance program. A lot of my loan officers, loan brokers are taking advantage of. I talked to a few realtors about it. Prior to me joining the lender as an account executive, I actually funded one of their down payment assistance loans like 4 years ago.
Oh, nice.
For a family member.
I didn't know about nada.
Yeah, it's crazy.
So I'm mad at you. You didn't tell
Yeah,
me about that.
I know you should be. It was crazy. My client, they just had their money tied up in Bitcoin and they didn't want to take it out. I was like, no problem.
Was Bitcoin legit?
Bitcoin is legit still. Like, yeah.
I had,
Yeah.
you guys are going to come for me and be like, what does she know? I had a listing a couple years back and the guy goes, hey, so I want to buy this house with Bitcoin. And I looked at him like, I was like, are you joking?
I mean, yeah. I mean, I guess
he didn't buy it with Bitcoin, but he did have it. And I was just like,
do you have a lot? Did he show you his balance statement?
I can't remember. You know what? I think he had a lot.
Probably had a lot, huh?
He did. And I was like, okay. But now I feel like a dumb. I was like, oh, I guess. I was like, hey, I should have been nicer to him. He probably would have bought second, third.
That's crazy.
Anyhow, he did end up buying the house. I did end up selling it.
Nice.
He wasn't my client. He was on the other side, the buyers. But either way, John, I want to pass you the microphone, and I would love for you to share with us. And this is just me thinking out loud. Is it different for you, with your niche of clients? Is it different when it comes to down payment assistance? Is it just us? Is it a cultural thing with us that our clients, well, me, I'm very much the Hispanic community. Yeah. I love mi gente. But is it different with you guys? Like, do you see, or in your age group, do they still ask? What generation?
That's a good point. Yeah, you would be
like Gen Z.
Gen Z.
Yeah, Gen Z.
Because my daughter's a millennial. And I can't remember what I am, but anyways,
Gen X. I think we're Gen X. Okay, yeah, we're Gen X.
Yeah.
We're Gen
I'm a
X.
wannabe boomer because
like which one?
Whichever one. Depends on what mood ISIS is in. But with your generation, do you notice that there's a high demand for it, or is it just like, hey, I got it? Because you guys be making some good money. Everybody's like, right?
100%. Yeah.
So
I mean, nowadays too, like where the housing market is now, like a lot of people, they can't even afford like properties, right? So I'm thinking like they would need like assistance, like support for even just coming with a down payment, because nowadays a lot of people don't even save money in their account. Like the average person doesn't. They don't have $1,000 in their account unless they're like entrepreneurs. They're like building businesses, doing sales, and that's what I've seen. Like for my generation, like even for renting an apartment as well. Like a lot of people, even to their 30s now, are still living with their parents.
Oh yeah,
right? It's so tough now.
Yeah, it is very hard. But you know what? One thing that, and I'm not calling you a liar, but what I've noticed with my clients in your from your generation that I've had the pleasure of working with, is they're more open to being guided. I don't know if it's because they don't have the money, but they're more receptive. They're like, tell me how to do it so that I don't have to go out there and have a legit job.
Yep.
I mean, I know that's like, wait a minute, what are you doing, Isis? No, like legitimately. Like I've had clients that they're like, look, I have enough to buy a house. Like I don't have my down payment, so tell me how to go get it, right? But I have my boyfriend or my friend that wants to buy a house with me, so we both were just making it a month, but we want to combine our income. And listen to this, okay? They're like, we want to combine our income. We don't have a lot of debt, right? We have decent credit, because that's one thing though about your generation. They take care of their credit, right? Yes or right? Yes or wrong? They take care of their credit, and they're willing to go on there together, porque like in Spanish, la unión hace la fuerza. So there's more of them borrowing, for that said home, and their mindset is, I'm going to rent their rooms, and that's gonna pay my mortgage. So let me just go qualify.
Right.
Yes or no?
Right.
Yep.
Let me just go qualify for the mortgage. Let me rent out the rooms. That Gen Suite thing is very popular because you have a whole ass apartment that you can rent out and then live free, so that I can be a social content creator and do what I need to do. They're like doing agency jobs with Uber Eats and all that. So they're about their hustle. It's just a different hustle. And it's a different type of client. So our job, or our profession, if we love what we do, is we live to serve, which means I'm going to turn around and say, look, do this
Yep.
because I see where you're going, hustler. I see where you're going with this. I
Yeah.
know what you're trying to do. I respect the game.
Mhm.
You're
Mhm.
going to rent out the other bedrooms. Obviously, it's your primary residence first. Don't commit fraud. Live in it, rent the rest out,
Yep.
make the payments on time, make that equity, and then do what later? Turn around, rinse and repeat. Now go buy another one, do the same thing, refi. So what I'm going with this is that your generation is more open-minded, not so much of I'm gonna sit here, pay my house for
Yeah.
30 years, and then no, they're like, no, I'm good. I don't care that I have to live in San Jacinto, or not that there's anything wrong with it. Don't
Right,
come for me.
Mhm.
I don't care that I have to live in Hemet because a lot of them are gonna drive around Uber Eats,
Yeah.
do whatever it is,
Maybe
or
driving
you know,
anyway.
right? Or they
Mhm.
work from home. They're just thinking of how am I going to make money so that I don't have to legit clock in 9 to 5.
Yeah. Yeah.
Yep.
That is
Yeah.
my bread and
Right.
butter because if ISIS or my client doesn't have to clock in 9 to 5 at Macy's or whatever store, I can go out there, rent this house, live in it,
Mhm.
essentially free,
Yeah.
live in it, rent it, and get other people that are in my same age group or maybe a little bit older because we vibe, have them rent a room or the gen suite, make myself my equity, right? Because I know that car payment outside, I don't want a nice car. I'm just gonna roll around in this whatever Sentra or Toyota, but I'm looking at it long term. I'm going to rent out the rooms. I'm going to rent out the gens whatever suite. I'm going to work from home. I'm going to do content creation. I'm going to do all that, and I'm going to secure the bag because later on these properties are going to go up in value versus where the car is not. So that's your gen. I mean, correct me if I'm wrong. I could be wrong. Maybe it's just my clients, but that's what I'm seeing in your generation.
So like 100%. You're good. Yeah, 100%. What I'm saying too. 100%.
Sorry, I was gonna sneeze mid.
Oh, you're
Oh
good.
no, you're good.
Just edit it out.
Yeah. But isn't that true though? Like your people.
That's banger.
Yes,
Yeah,
100%.
Now that you mention it too, like a lot of my entrepreneurial friends, they think that way.
Yeah.
Right. A lot of people who just work regular jobs, who are just working regular 9 to 5s, don't have big goals for themselves. They think the other way. You know. But like for the ones who are like in businesses, they're in sales, they're like crushing it. They're like, look, like might as well maximize my youth, do whatever I can because I don't have much responsibility now. I can just like move anywhere. I don't care where I go. Like, what's the best investment to get into? Like, those are the kinds of people that want the guidance too. Now that you mentioned it,
and they're like,
there's
hey,
a lot.
yes, I love that. Sorry, I had to blow my nose, allergies. But these clients, I mean, it's not even so much that I'm saying it's an age group; it's a mentality.
Yes, mindset.
Because mindset, right? Mindset. Because if I'm thinking, look, I don't have kids right now, or maybe I have kids, maybe I'm a single mom, but I'm like, you know what? I don't care. I'm gonna move to whatever city where I'm able to afford the payment, right? I'm going to rent out a portion of my house. It's going to help me make the mortgage payment. I'm going to live there with my kids comfortably so that I don't have to worry about the mortgage payment. I'm going to do this for X amount of years, right? While the house increases in equity. Then once I'm ready to move, right? Or when it seems right to sell or refinance, then I'm going to grab my bag, what I've secured in earnings, and I'm going to go do it somewhere else. Because you have that mindset of it's not so much of the location, who cares? I'm blessed to have a ceiling or a roof over my head. I'm blessed to have a house. I'm going to go in this with the mindset of a business because I'm going to secure the mortgage, the payment. It's okay. Right. Then I'm going to do it again in another property. And I'm not committing any type of fraud because what am I doing? I'm living there. This is my house. I'm okay with it. I'm not thinking, it doesn't check all the boxes. It checks enough boxes because I can afford the payment. And I'm going to rent out the other rooms. Yes or no? Yes.
Yep.
That is smart because guess
1,000%.
what? Back in the day, my aunt, may she rest in peace, she was that lady. She was a single mom raising 4 of my cousins. My mom was a single mom. She couldn't afford the rent on her own. So they rented a house. My mom and my brother and I, we lived in a room. My aunt lived in another room with her kids. And then my aunt rented the other 2 bedrooms to single guys that had, 9 or afternoon jobs or whatever. She did that, mind you. The only thing is, unfortunately, she didn't own the house, so we didn't get the equity. But that's how she lived, because that was helping her put food on the table for her kids, and the after school things that we couldn't afford unless they rented those rooms. That was giving her the ability. So the change in our and lifestyle now is that we have, your generation saying, I'm going to be that person. Maybe they had the same scenario that I did growing up, but now they're buying the houses, they're renting their rooms, they're making the bag, they're not caring about where the house is. By all means, it's safe, but they're thinking business wise. Like you said, they're thinking as, I'm going to do what? Earn the equity.
Yes.
Yep.
Be
100%.
right, be the renter. Obviously screen the people you're renting to, right? Keep yourself safe, but secure the bag, because guess what? In a sense, real estate is not even in a sense, it totally is a monopoly game. It really is. I never understood why I loved Monopoly so much when I was little. Besides the fake money, I was like, I have money in the house.
I'm
Almost everyone
rich.
But guys, think of it.
Yeah.
If you I ran out of money before everybody else was playing, but guess what? When they landed in my little, area,
They paying you rent.
Pay me rent,
And then that money piles up.
and then the money piled up. So
Stack
while
that cash.
all my
Yep.
cousins were like, "Oh, you don't know how to play," actually, guess what? I guess I did, because here I am now. So what are we saying to you out there? Whoever's watching this, besides I says, "Oh, she loves Monopoly," is secure the bag.
Yes.
How do you secure the bag? Invest.
You have to start.
You have to start somewhere. Invest. So use, and this is going to be probably counterproductive, but people are going to be like, what is she doing? Use the programs that are out there for your benefit, because if it's okay for you to go get your house with the down payment assistance, you don't have the money up front, you're going to live in it, you're going to rent out rooms, you're going to do whatever it is that works for you. Have the mindset of a business, but by all means, don't commit fraud. Obviously, it's what are you going to do with what you have available to you? That's the question you need to ask yourselves, because if at the end of the day, let's just pretend that I'm not in the business, I'm a single mom, which I'm not, but if I was, and I have enough to go purchase a property, okay, I don't need down payment assistance, but say I need closing costs. Now that I have a little bit more knowledge, or that we're here giving you guys that knowledge, then I'm going to go find myself a realtor that's going to negotiate closing credit for me. I'm going to go live in my house. Perhaps I'm renting out the garage, I'm renting out a room, I'm paying my mortgage, right? And I'm going to build equity. That's step one. Yeah. Step two is make a 5-year plan. See where you're going to be in 5 years, or maybe 2 years. Am I going to refinance to take money out? And now it's not going to be my primary residence. I'm going to refinance the house, take money out, go buy another property, right? Totally legit, totally legal. And I'm going to go live in that house now. Maybe now I have a honey by that time, and that honey wants to come in on it with me. Or maybe I'm just, I'm renting now that house that I started with. Now I'm living in this one, and I'm going to literally rinse and repeat, because now my ex-primary residence is, paying for itself, right? Now I'm living in another property. And guess what, guys? This is how you build that generational wealth. It's not so much because I'm trying to sell you on come, buy real estate with me so that I can pay my kids' college tuition. No, it's so that you guys can build something for yourselves, for your family, for your kids. Yes. Whether you're John's age right now and you're doing it without kids, or whether you're a single mom or single dad and you're like, hey, I'm tired of paying rent, do that. Or maybe you're happily married like Gabe or myself or what have you, and you're like, hey, how can I invest and make money, or how can I secure my future for my kids? It's in real estate, because it's not in the car. The car, you drive it off the lot, although it looks cute, it's all that. It has a $900 payment. Yeah. It is a waste of money. Yeah. It is. I'm sorry. Don't come for me, car companies. If you want to give me a free car, I'll take it. But it is a waste of money, because it's not going to increase in value unless it's a classic. But you have to wait X amount of years.
Long time.
A long time.
Unless it's a classic or supercar.
Yeah.
Porsches age well.
Okay, well,
Lamborghinis can age well.
It's a 2-seater for a reason. You can't really take people with you. But I think that the whole takeaway from this whole podcast, or at least for this one, is how are you guys using what's out there for your benefit in a legal manner?
Yes.
There's ways. There is
Think
ways.
about it.
Think about it, because
Yes.
you need to sit with a professional. Maybe it's John, and he's telling you, hey, do it this way. Maybe rent out all the rooms, live there, have your college buddies move in with you, or whatever the case might be. Or Gabriel's telling you, you know what? It's time for you to refinance. Take out what you have in equity. Go buy a second property. Don't go buy the car. Don't do that. Those things are not. They're not going to give you, like, they're not going to pay you.
Get the
dividends.
properties.
Get the
Let the
property.
rental properties
Yes.
pay for the new car.
Yes,
Yep, that's
exactly.
right.
the way
Thank you.
to
That
do
was
it.
the bar I was
Yep.
looking for. He
That's
was
the
right
way to
there,
do
yeah.
it.
But do that, because at the end of the day, I know we're not leaving this world with anything. Okay,
Yep.
we're not. But it's what you leave your families with. When you
Yeah.
leave this world, what do you leave them with?
The
Do you leave-
legacy.
yeah, the legacy.
That's
Do you
the
leave
goal.
them with a bunch of cars that they have to pay insurance on? Or do you leave them with properties that they
Yep.
can refinance, they can sell, they could, do all
And
these
a
things?
garage of 30 classical cars.
This
Oh.
guy with the
I'm
car,
going
so-
option B.
Yeah. But yes, it is. I mean, it really is about that. And the more you know is the better choices that you
Yes.
make. And that's, I think,
100%.
that's what the collaboration is here, right? It's
Mhm.
Oh,
what you know.
100%. Yeah.
Mhm.
Like, that's the thing. And, getting into the market is probably the best thing that anyone could do for themselves, because as soon as you step in to the market and buy a house and become a homeowner, that's the moment that you begin to take advantage of the appreciation, the equity that is being built in that home. And regardless of, where you're at, what time it is, what the market's doing, if you can get qualified or pre-qualified for a home loan, if you could find a property that meets your family's needs,
Mhm.
and you could afford the monthly payment, there's no reason why you shouldn't move forward and buy a home, because you're paying rent somewhere. Might as well
Mhm.
You're
pay
paying
your
a mortgage. It's just not your own.
Yep.
Bingo.
You are paying someone's mortgage.
100%.
It
Yeah.
is just not your. It doesn't have your name on it.
Mm-hmm.
You're not the one getting the tax write-offs.
Yep.
Mhm.
Because if you're paying an apartment, that's a mortgage. That's somebody else's little.
Someone owns that apartment building,
Ooh,
and they
they're
took out a
buying
lot
those
of
30
money.
cars.
Yeah.
They're buying the 30 cars that he's talking about on your
Yep.
buck.
Yep.
So you decide: is it your house or is it someone else's? But a mortgage is being paid. It's just not your own.
Yeah. Pay your own mortgage. Get your properties.
Mhm.
Get in the game. There's always a way. Do your research. Reach out to professionals. If you have questions about any of the information we covered, you can always comment. You could DM. ICE's contact information will be in the description, as will ours. And ultimately, our whole goal is to add value
Mhm.
by shedding light on complex or mysterious topics, or topics where maybe you're seeing people say, hey, this city's giving you $100,000, or okay, cool, what's the catch? Always ask what's the catch, and do your due diligence, do your research. Don't be afraid to do it on your own, and we're here for you. Hopefully this shed some light on the topic. Hopefully it stirred up additional questions. But if you have any further questions, reach out to us. John, anything else, my man?
That's pretty much it. All right, guys, that was episode 41 of the Hustle
Woo!
Podcast. As always, thank you so much for Ice for being on today. That was part
Woo.
2. That was phenomenal.
you.
There was so much back-to-back value. Dude, when I was
Yes.
sitting here, I was like, damn, like in my head, just like absorbing all the information.
Soaking
I'm like,
it
dude,
in.
just keep talking, just keep going. I'm like, even though I'm in the camera as well, I'm like, all right, you guys take care, right? I'm chilling here. I'm chilling right here.
I felt a little bit bad that
No.
we're like yapping.
I don't.
This is what I
Oh,
want. This is if I
Yeah.
could add to this, you guys could cut it out. But what are since you became part of this industry, what are the 3 top things you would tell yourself if, say, you could travel back in time to today at a later age? Does that even make sense? What would you tell yourself to do? Like, if you're either the consumer or the professional, what are the 3 top things you would give yourself advice for?
Top 3 advice, I would say, like, definitely get a mentor a lot sooner, right? Because like when I got into entrepreneurship 5 years ago, like doing different businesses, there was a lot of failures because I did it like by myself, right? I learned a lot, but I could have gone way further, could have made way more money if I just invested in a mentor that was in the space that I wanted to go towards, or achieve, or be where they're at, right? That's one. Number 2, I would say, Yeah, definitely just keep learning every single day. Like that's synonymous with getting a mentor.
Mhm.
I will say the top thing, not top three, number one thing, yes, getting a mentor, because
Mentor.
that's gonna help with everything else. They'll guide you in the right direction. You're gonna learn from your mistakes. You're gonna take action. You're gonna be in the trenches. They're gonna tell you exactly where to go, and that ties in with the mortgage space too. Where if you're the kind of person that's Gen Z, you're 20 years old, 25 years old, and you're looking to find a way to park your money, buy a house, talk to a professional, make sure you speak to somebody that knows what they're doing, and just be open to learning every single day and making that mistakes so you could get ahead in life.
I love that, but I'm gonna
It's
steal
good.
something from you because I don't want you to ever feel this is for you. It's not even so much for anyone else,
Yeah.
but I want you to be like, hey, those. Although it took me a little bit longer, I respect the fact that you want a mentor, but I think that the value that you bring to the table because you did it on your own for such a while, there is no mistakes in your career. And I've only known
Yeah.
you a little bit, but I'll tell you this:
Yeah.
a value that you've brought to me and my daughter is that based off of everything that you had to struggle with because you didn't have anyone giving you the blueprint, because of that, you've become a bigger value. And
Yeah.
now I've taken a little bit from you, and my daughter has taken a bit from you because you went out there and did it on your own.
Yeah.
So don't ever discount yourself.
That's
You
right.
are a badass.
Yeah.
And
Yeah.
but yeah, I mean, your knowledge is or your input would be get a mentor. I love that. But if you don't have one, value the process.
If you don't have a
Yeah.
mentor, that's okay, right?
That's okay.
It's like take action no matter
Yeah.
what happens. Like you have to fail
Yeah.
regardless, right?
And that's what you did.
Mhm.
That's
Yeah.
right. And
You took action.
yes, ma'am.
Yes, you did.
And you
Yes,
learned.
you did.
Yeah,
Mhm.
Yeah,
I
you did.
appreciate you.
You're welcome. I
Yes,
just
ma'am.
I think
Yeah.
you and it's not I don't want to make you feel any type of way, but I want you to embrace that because I know that a lot of your value comes from that because you
Oh,
could have
yeah.
just sat there and been like, oh my God. No. Instead you went out there and you
Took
did
initiative.
Yes.
He took
you
so
did.
much initiative. So I'll tell you about John. Like
Yeah.
when I met John about 6, 7 years ago, when he worked in one of the stores that I was responsible for, one of the things that I noticed is that he was teachable, and fast forward, we stayed in contact, and he was on that personal growth journey, and he took that initiative to develop himself, and far too often I think individuals are out there wanting to improve, wanting to grow, but they're not doing anything about it. And maybe they're sitting there saying, I wish I just had someone to show me the ropes. Well, someone's out there, but you got to go find them. And anyone that has any information of value is not just going to give it to you, and they're not going to look for you because they have no incentive to share that value. Anytime I've ever been mentored by anyone that added value to me that I still think of and communicate with today, I've earned that mentorship by either working with them or working for them and putting in the required effort for them to see that it would be valuable for them to give me information and mentor me. And so again, the mentorship is great, it's phenomenal, but it doesn't really start until you take control of your own personal growth, because once you reach that point, you are going to be at a level in life where you're going to notice the individuals that actually have value and something to offer you, because there's a lot of people out there that will give you advice about anything and everything that they know absolutely nothing about, and they'll trick you and fool you and you will think that they're amazing because they talk smooth, they got all the programs, they even got a couple books, but they never sold a home before, they've never closed a loan before, they don't own investment properties. Like this is real. So again, like take your development seriously, take advantage of the resources that are out there, and the opportunities to learn from quality individuals will come, which I know John came across a ton, and that's because he sought after it. So
I think
Oh, yeah.
I think this el que busca encuentra. If you go search for it, you're gonna find it, right?
yeah.
But I'll say something, and it's not that I disagree with you. Yes, people have books. Yes, people they see if if they're gonna have a benefit from what they teach you. I get that. I see that all the time. But then there's also people, and I'm not gonna say just me, but there's people that want to see others. I mean, there's not
Oh,
many of
yeah.
them that want to see others win, or they just love to share what they've learned or what they've messed up on.
Yes.
So although, okay, I agree with what you said,
Mhm.
I think that there's a lot of value in those that have made mistakes.
Mhm. Oh,
And
yeah.
I'm going to tell you why.
100%.
Because there's people learn different in different forms, right?
Mhm.
I learn, this is me, by my mistakes. Because if I know that I screwed up, I write it, don't go do that again,
Yeah.
because you're going to screw it up again.
Mhm.
So I'm very quick to teach people, hey, I did all this wrong. Don't do any of this because this is all wrong.
Yeah.
I might not know everything, but I will teach you everything that you're not supposed to do based off of my mistakes. So I think that
True.
that is also a huge value. And again, not tooting my own horn, but I think that's a big, big value, because who do you really know that's willing to tell you, hey guys, unless it's your mom? Okay. No hagas todo esto. Don't do that. This can happen. You don't have people like that in
Yeah.
this world. There's very few of those that will tell you, don't screw up this way. It's only somebody that
True.
genuinely cares, and it's always going to be your mom.
Yeah.
She's always going to care about you. But also go, not so much hang out with them or ask for advice, but go learn from others' mistakes.
Yes, 100%.
Learn from others' mistakes.
100%.
Learn what not to do.
Yes,
Mhm.
I can write a book about that. So
Mhm.
my mind, what not to do. But thank you guys.
Love it.
Bye.
Yes.
All right. Thanks, guys. So that's
Thanks, guys.
episode 41. I hope you guys enjoyed it. Again, make sure leave a like, comment, let us know what you think. Also, share with all of your friends, as many people as possible, because that's how we grow the show. So, and by the way, if you want to find our contact info, reach out to us in our bio and also description. And see you guys tomorrow.
Send me
Yes.
hair product advice.